let's talk about retail investors. Everybody watching this video right now. Because, as I spoke about earlier, it's a little freaky. I've been spending so many trophies. So many people hitting 6 figures, 7 figures in their portfolios. Start to wonder, it's got to be too good to be true, right? Well, here's the deal, okay? The last time this transpired, once again, was the second half of 2020 into the first half of 2021, right? Now, I got to see that crowd of investors. So what did we have at that particular time? I can tell you this. We had a lot of super noobs in the market. People that just got in, you got to understand, the economy, worldwide economy gets shut down February 2020. Workers start being all sent home. People start having a lot of time on their hands. They start consuming more social media and media in general. And, everybody and their grandma's talking about Rona. This is, February 2020, March of 2020, right? Meanwhile, the stock market's having many of the worst days it's had in its history during that particular time. I mean, it was the fastest stock market crash we ever witnessed. The S&P went down, almost 35% in a matter of, weeks. We're not talking about, a year. We're not talking about many, many months. We're not talking about many quarters. No. In a matter of weeks, the S&P 500 dropped like 35%. It was ridiculous, right? So you attracted a lot of super noobs to the market. A lot of people bored at home, right? Because even a lot of workplaces didn't know how to operate their business at that time. So even people that, they didn't lose their job, they were just, not having to work as much. Let's just call it that, right? So they were like, let me check out this stock market thing, right? No, you had a lot of people that bought in that Rona crash that had money, because going into Rona, I would say the economy was pretty good. I would also say, the economy was pretty dang strong going into Rona. Like, if I would think about that economy, the end of 2019 and kind of go into the beginning of 2020, it felt good. I thought, it's going to be a good year. And so, a lot of people had a lot of money going into that, and then the Rona crash happened and they bought, right? They bought stocks as the market crashed. And they made crazy money really fast because that market bottomed around, March 23rd? And then it went up in a straight line. And so people are like, dang, that was awesome. We just made so much money so quickly. Actually, it reminds me a little bit of what happened this spring and into the last couple months, right? I mean, very, very close in regards to just a straight V-shaped recovery. Now, you attracted it then essentially as time went on there, a lot of degenerate activity because it morphed into from people just kind of being buy the dip. Oh my gosh, the stock market's crashing. I know every time the stock market crashes, buy stocks, right? And so that's what people did. But then it morphed into really degenerate activity, I would call it, right? GameStop, AMC, that took over completely what everybody was talking about by mid 2021, right? Clown stocks like that, they had no business being even talked about at all. Never mind the most popular stocks in the market, but that's what happened, right? Retail investors got super heavy into margin. They got super heavy into options, right? Just degenerate activity, and everybody was just caught up in this kind of euphoria. And because a lot of people made money really quickly after that Rona crash, essentially, right? Now you tack on stimulus money, you tack on PPP money, right? There was so much money being sloshed out at that particular time that people were just gambling that money. Because you got to understand, some people actually needed that stimulus money to cover bills or do whatever they had to do. Some people actually needed that PPP loan money that they were doing and all that stuff, right? And all the other programs they had. But a lot of people didn't. And you know what a lot of people did with that stimulus money, that PPP loan money and all that stuff? They went out and they bought luxury handbags with that money. You know what they did? They gambled it on crypto. You know what they did? They gambled it on sports. You know what they did? They gambled it on stocks and options and stocks like GameStop and AMC and all that stuff. And so that was the crowd we had at that particular time. Now that is a very, very different crowd than what we have right now that's making the big money, right? Many of the 2020, 2021 people that actually stuck around, because you got to understand a lot of that crowd essentially left in 2022 because they got obliterated. They already were getting obliterated on those GameStops and those AMC stocks and all those sorts of things and the options and the margin and all that. But by the end of 2022, massive chunk of those people were gone from the stock market and they left forever, right? But there was a few from that batch, a few that actually made it through to the other side, right? And so we have some of those folks in the market now that made big money, right? That they made it through. They didn't get caught into too much of the degenerate activity that was going on at that time. Maybe they got hit on this and that. But at the end of the day, they made it through to the other side. And they understood the game, and they're like, okay, I'm staying with this long term. You got a lot of people that have gotten into the market 2023, 2024 with the AI excitement, right? The AI excitement's been talked about everywhere for really the past, I would say, 3 years now at this point in time, right? 2.5 years. And it attracted a lot of people to the market, no doubt, that are kind of focused on AI. A lot of tech people, right, that are really excited about this new wave of technology and want to also capitalize on it from an investment perspective. So we got some of those folks, right? You have a lot of people really focused on actual legit companies, right, that are growing their revenues, growing their margins. The focus is not on stocks like GameStop that had a horrible business model that was in massive decline, or AMC that was a horrible business model in massive decline, right? Like a lot of the most popular stocks are actually really legit companies with growing revenues and margins. Is there some stuff out there that people are getting a little crazy with like quantum computing and this and that and what this next? There's some of that, but I wouldn't say that's made it like big yet. Like there always is a potential that could morph into that, but it's not really like that right now. And at least even some of those companies, they still have exciting long-term trajectories in terms of what they could potentially do, right? GameStop and AMC and all those other ridiculous stocks that people were tied into in that particular time were not that, right? Now, additionally, you got people that are in this market, they're really focused on building portfolios and playing this game for the next 10 to 30 years, right? That's what I'm finding time and time again. This batch back here, they didn't care about the next 10 years. They didn't care about the next 30 years. The majority of this batch was just a degenerate gambling activity crowd. Degenerate, like they're just worried about how much money they make that particular day or what they try to make that. There was a whole casino gambling mentality. A lot of the folks in this market are focused on building up a great portfolio that's going to last in many, many years. And it's just a very different mentality than, trying to go all in this stock and all out that stock, and I'm going all in options this week and margin and out and all that stuff, right? And this group really understands they need tools to help them to achieve what they're trying to achieve, right? And I can see this perfectly even by what's going on right now, right? Because, the 1000X sale we're about to have, I've already seen the interest for that sale. It's insane, like absolutely insane. No one would have cared about this sale from that 2020, 2021 bunch. If 1000X existed back then and I did a sale on it, people wouldn't care. You know why? Because people are like, why do I need to listen to an earnings call? Why do I need to run projections on a stock? Why do I need to look at a PE ratio or a forward P or compare companies or all the stuff you do on 1000X? Oh, wow. You think I'm going to look at charts of financials? I'm not doing that. Dude, that group, nah. They were not into that. They were into gambling mentality. They were not into fundamentals and trying to research companies and I'm gonna run projections on where this stock should go over the next 5 years based upon what I think their net income is going to go to, their revenue is going to go to, the P ratio. You think that group cared about that? No. All the education portion I have in 1000X. Oh, how to decode a balance sheet, how to understand income statement on high level cash flow. You think they cared about any of that? No, that group did not care about any of that, right? No. How to value a growth stock? You think, come on, man. They're just like, what's the next hot one? What's the one that's moving today? Oh, it's up 5%. Maybe it'll go up 10%. Let's put money in this one. It was just, that was a very different bunch back then. So I'm seeing, although the level of success is similar in terms of people hitting new milestones, what I'm seeing in the real world from my perspective as somebody that runs a huge YouTube channel and, has big Twitter and, X and, Instagram and all that stuff, from what I'm seeing, it's a very different crowd, very different mentalities. This is not the same bunch, right? And so I'll say it's very much more healthy this time around, right? Now, there are some stocks that kind of worry me a bit for 2026, right? Some of those stocks like Palantir, Tesla, stocks like that, those worry me a little bit for next year because I do worry with the Palantir. They've been showing such insane growth rates. They should continue to for the... Oh my gosh. Oh my goodness. Oh, I had a chip down a chip like right there all of a sudden. You know, I was eating some chips before this. Rule number one before you record 30+ minute YouTube videos, don't eat chips. That was my own rule, and I think I broke it, okay? But Palantir, for instance. Okay, so Palantir worries me a little bit for next year. Here's why. Obviously, we know the valuation's insane. Now, the valuation can remain insane as long as you have these insane growth rates, right? The problem for Palantir is they're going to start to hit really tough comps next year. Really tough. Because all these insane growth rates they're putting up this year, and they'll continue to through the end of the year, they're going to have to start comping all those numbers. And so I worry that Palantir will start to show a deceleration of growth rates, and that's going to throw a lot of cold water on that stock. So I worry about that. Tesla. So much excitement around robotaxi. People are going to realize what I've been talking about in regards to that. It's not going to be meaningful for Tesla's numbers for years. People are, in my opinion, going to likely come to the realization of that in 2026. That scares me a bit in regards to that stock, being that it's at ridiculous P ratios and those sorts of things. HIM scares me a little bit for next year, especially if that one continues to roll through the end of this year, which if the Russell rolls, I wouldn't be surprised, because that one I worry about a deceleration of growth rates as well. So there's some stocks that I'm a little concerned with, right? Not like I'm ready to buy puts on those stocks yet, but let's say those stocks rolled into the next few months, and when I mean rolled, I mean like went on a ripper rally, shoot, would I then be interested in some puts? Potentially at that point in time, right? Not quite yet though. No, additionally here, if we look at forward P ratios, this is from Yarn-Denny Research. I love forward P ratios. It matters so much more to me than trailing 12-month P ratios, right? I want to know about the future, not about the past. Now, here's the deal when we look at this, okay, out of Yarn-Denny. The stock market's driven by the Mag 7. We all know that. It's the biggest weights in the S&P 500, the NASDAQ, the whole show, right? Now, we're not high yet in regards to the Magnificent 7 forward P ratios. It's about 28. Which is, certainly way above the market, but those stocks are insane. Like, look at Meta, right? Look at Meta's growth rates. Look at the earnings per share growth. Look at the revenue growth. Look at Amazon. Do the same thing. Look at Nvidia. You go through those companies. Google, which stock never gets respect. Look at even that company's revenue growth, earnings per share growth. Like, those companies are special. Apple's might be the most special of them all, just from the perspective of they have nothing exciting going on in that business model right now, zero exciting things, and they still find ways to grow that earnings per share substantially. It's crazy. I'm like, how do they do it? It's magic. So, by the way, share buybacks matter a lot. So, Mag 7, I can't really call it high. If Mag 7s continue to roll, next thing you know, you see Meta hit $1,000, $900, somewhere around there. You see Amazon run $250 to $300. You see Google McDougal go well over 200. You see Apple go to all-time highs. If you see that over the next few months, then we'll start to get pretty high in regards to these, forward P ratios for the Mag 7. But I can't call them high yet. Now, additionally, you look at S&P 500 large cap, mid cap. Mid cap's not trading high. It's 15.9 right now, forward P. S&P 600 small cap, 15.1. So I can make a very strong argument that mid caps and small caps are trading cheap right now. Are they the cheapest they've ever been? No. Are they pretty dang cheap? Yes. A 15 for mid caps and a 15 for small caps, that's pretty cheap, folks. And so that's low in regards to those ones. So, if you think you got some sort of valuation, like end of the world situation here, you don't really have it. You just have some that are a little high, right? But heck, if these companies in the Mag 7 keep putting up double-digit earnings per share growth, then a 28 is not crazy at all. Like, if someday that breaks, then it might be a different situation. Now, my guess is at some point in 2026 or 2027, we're going to hit hard, right? We'll get a big bear market. When I say big bear market, I'm talking about a bear market that lasts 6 to 18 months, right? That'll happen at some point in time. But, that's just a guess at this point in time. We need something to break, right? In 2022, we had it. We had massive out-of-control inflation. We had a Federal Reserve that was raising rates rapidly. And so in 2022, we had the recipe for a massive, obviously down move in the market. A great financial crisis we had a huge housing bubble with just pure speculation, right? And we had a major unemployment cycle go through at that particular time. And so you had the recipe for a major crash there. In the Rona, obviously you had the recipe for a major crash there, right? We're going to shut down the worldwide economy for potentially years. Yeah, that sets up for a major crash. So what gets us there in 2026, 2027? We got to wait to see how things develop here, right? And then once we see how things develop, maybe we can put our finger on it and be like, you know what, this thing is going to happen. But here's the issue, people like to try to wait till these crashes happen, right? The next big bear market. Here's the deal, okay? People have been waiting for the next big bear market since the last bear market. Like a lot of these Wall Streeters refused to invest at all really in 2023 because they were of this thought process still of like, we're going to go lower. So then they wait. Then we finally get a kind of a new bearish market, in the spring of this year, right? And a lot of people refused to buy that one too. A lot of these Wall Streeters. You know why? Because they thought it would go lower. Guess what? In that bear market, we didn't even go as low as the 2022 bear market. So you could have waited till the 2025 bear market happened, right? Where the NASDAQ went down almost 25% pretty quickly. You could have waited for that. Okay. Yeah. You still would have been buying at insanely higher prices than if you would have just bought in 2022. So you say, okay, I could buy stocks today or I could wait till the next big bear market. Well, let's say next big bear market, let's say it happens in 2027, right? Something happens, all the recipe goes right over the next year, and then eventually 2027 we get a big bear market, right? There's no telling where the stock market will be before that bear market happens, and you might be paying higher prices for stocks at that particular time than if you just bought now. It's very rare you get a crash so big that you get, stocks at lower than the previous bear market. It's very rare. Even, you could look at where you were buying stocks in the 2022 bear market, for instance, right? You would have been way better off still buying in 2020 bear market. Like what you had to pay in 2022 was substantially higher when it comes to indexes. This is all food for thought here, folks, and that's all things to consider, right? And so that's why I consistently buy in the market. I buy almost every single Friday. I'll be buying Thursday stocks. I'll be buying stocks on Thursday this week, right? So the market's closed on Friday. Jeez. No, I showed this image a lot, a few years ago here. It's called Jeremy Lefebvre's hotel, the Flapjack Flipper Resort, right? Build a portfolio you'll be proud of years from now. So important. So important. Staying diversified is your alpha long term. Growth, value, dividends, hedge, cash. GVD, what I preach over the past few years, I can tell you back in 2020, 2021, man, people were not focused on having a well-rounded portfolio of growth stocks, value stocks, dividend stocks. No. They're focused on what stock's going to hopefully go up today, right? Conference calls are non-negotiable. You got to listen to those babies. Know your stock's financials, know your stock's metrics, outwork and outsmart, buy the dip, and never trip. Keep those things always in mind, folks, and don't get caught up in all the other stuff, okay?
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
Okay, let's talk about some tax changes for the big income people. All right, the people that have a lot of money. You make a lot of money. Or for the people that are going to make a lot of money or have a lot of money in the next few years, this part is very important for you this next minute.
And investors. So is it better, worse, indifferent? What's going to happen here?
It's different and slightly better. It's really a mixed bag depending on how you earn your income and what your income is. So let's take a look. The top 20% of Americans are those who make over $220,000 a year. They get an average tax cut of about $12,000 a year. That's about 3.4%. Now, millionaire earners get an average cut of about $75,000. That's about 4.5%. So what are the most important provisions? Well, the SALT cap, as we all know, that goes from $10,000 to $40,000 for those making less than $500,000 a year. Now, the 20% deduction for pass-through income, that's very important. That will be extended. That's both the House and the Senate version. The estate tax becomes permanent and a lot more generous, with the exemption going up to $30 million for married filers. Now, there is a big new benefit in the Senate bill for wealthy investors that was not in the House bill. It's known as the qualified small business stock provision.
Okay, so moral of the story is here, tax cuts coming for the rich, coming for people like me, the big money people. They used to clean the dishes, but then they made a lot of money in the market, and they got rich, okay? So listen, here's the deal. You got to understand that does end up impacting the economy. And how does it do so? So, less money, somebody that makes $1 million, they get a $75,000 tax cut, basically, right? $75,000 extra in their pocket, let's say, for instance, right? Just run rough numbers. Okay, so where does that $75,000 go? It could just go into like a savings account, and then it's really not accomplishing a whole lot. Of course, banks can then lend against that $75,000, right? And obviously, when you compound this times, millions and millions of people, there's a lot of very wealthy people, obviously, in the United States of America that have very high incomes. It becomes a very dramatic amount. That's something that could happen, but that's just a small amount of people are going to do that. A lot of other people are going to end up investing that money, right? They're going to invest that money. It's going to end up in Bitcoin. It's going to end up in the stock market, and some of it will end up in real estate, right? So that's something to keep in mind there. Charities, right? Some of that's definitely going to end up in the pocket of charities as well. And so, there's no doubt like charitable organizations will do much better, right? Because when you look at the data kind of around charitable organizations, just a great deal of the money that go to those charitable organizations are from people that make a lot of money and have a lot of money, right? If I look at myself and I think about how much I'm planning on donating this coming year, right? I could tell you, man, it's such a crazy amount compared to what I was doing 10 or 15 years ago. Like, I still remember when I worked at Quick Trip, right? They wanted us to, like my manager was trying to get me to like donate money at that particular time, right? Remember, I was a dishwasher, somebody cleaning dishes, and then I was working for Walgreens making $8 something an hour, like in the photo department. And, I come from no money. Like, are you kidding me? And like, they were trying to get me to donate money. And it was just a very tough thing for me to say, yeah, let me donate, $200 a year at that particular time, right? Nowadays, I'm fortunate to have done very well for myself, and I'm more than happy to give to this cause or that cause. And I see something over there, I'm like, okay, I want to give to that. Like, it's just a lot easier when you get more money you have, right? And so, there's definitely a lot of things that benefit from that. The money doesn't just go into a savings account. It's going to end up in the economy. Some people will spend the money, right? Some people are going to go on more vacations because of that, right? Which, as somebody that lives in a city that is very dependent upon tourism, it's huge. Like, I live in Vegas, like, this tourism is still so important to this city. Obviously, we've built so many other industries over the past, really since the great financial crisis, because the city realized like, oh, we need to have something outside of just people coming to the Strip, right? But I could tell you, like, that'll mean a lot more vacations, which is great for the tourism economy and how many jobs that produces. I was just down in Playa del Carmen, and I was talking with the gentleman that was, giving us transport home. And I said, is it expensive to live in Playa? And I assumed it was. And he's like, yeah, based upon like Mexico standards, Playa is expensive. It might not be expensive if you come from America, but for, standards in Mexico, like Playa was expensive. But he said, people are more than happy to move down there, even though it's more expensive than a lot of parts of Mexico, because he said the job opportunity is just insane. And, you just got to understand with all those massive resorts down there and all the indirect jobs and direct jobs, all those resorts and all that travel of people like myself going down there and spending tons of money, right? It just creates so many jobs. And so, at the end of the day, like, you put more money in people's pockets, like, it's going to get spent out there. And if it's not getting spent, it's probably going to get invested. Like, it's going to end up one of those two places. If it's higher net worth, folks, a bigger portion might get invested. If it's, a little lower income folks, then it might end up getting spent in the economy, but it's going to go out there. That's one of those things we learned during Rona. Like, we learned a lot of things during Rona, but you know what one of them was? You put money in people's pockets, they're going to go spend that money. The minute they started spending all that stimulus money and PPP money out there and PPP loans, oh man, people couldn't wait to go spend that money. It was unbelievable. I remember going down the Strip, and it was like, Literally, I remember after they started flooding the stimulus money and the PPP loan money, I remember going, because obviously I live in Vegas. I remember going down in the strip in 2020 after they reopened things and whatnot. And I remember there being lines. I never in my life have seen this. There was lines of people waiting to get into the Louis Vuitton store, waiting to get into the Gucci store and the Prada store and the Burberry store and all these different high-end stores. I've never seen anything like that in my life. Lines of people waiting. Why? Because the government said, here's a bunch of money. And here's the other thing you got to understand about if you get a bunch of money that, I don't want to get too far off subject here, but the moral of the story is when you make the money, you have a lot more respect for the money. When you get a lot of money given to you, you don't have nearly as much respect for it, generally speaking, as humans. So you look at that money as, oh, I'm going to go out and spend this, or you look at that money as like, I'm going to go gamble it. Like that's just way a lot of people look at it, right? No different than, like the way if somebody gets given to them, $10 million from their parents, right? They're not going to have as nearly as much respect for that $10 million their parents gave them as, let's say, if it's a father that made the money, he's going to have a whole lot more respect for that $10 million because he's the one that went out there and earned it, like grinded his whole life, stayed disciplined, did all the things he was supposed to do to have this great net worth. Then he passed it on to his kid. And his kid's blowing it on private jets and, on the yachts and just screwing off, because it's like you're just getting that much money given to you. You just don't have respect for it, bottom line, right?